Right now, the bigger concern for us is that recession in the US, fading tailwinds of the China reopening in the second half of this year, and most importantly, the same time, the lag effect of the monetary policy tightening, which we have seen over the past 6 to 9 months, is going to hurt the domestic demand, which will certainly have an impact on the equity markets in ASEAN, particularly cyclicals, which have done quite well since third quarter of last year. Hence, that makes us cautious on the market from your point.
Is there a stronger proposition in India and Indonesia, those markets and countries that are less hitched to the external macro situation? Is that where you want to be? And are those markets what you want to own, given the macro uncertainty, Rajiv?
So definitely both these markets have a very large domestic exposure, good demographics, and interestingly, we are going to see pre-election spending, first in Indonesia, who is going to election early, and then later on India also. And both these markets are also seeing structural drivers like energy transformation, EVs, digitalization, manufacturing are attracting more FDIs. But the concern over here is if we are going to have a global risk-off kind of a scenario, in that case, it is difficult to expect a decoupling from emerging markets or even from the domestic basis. So we have seen 86% of the time, Asia equity indices and the US equity indices moves in line with that. So no doubt outperformance can come, and that's the reason why we are overweight on Indonesia, but expecting an absolute return will be a stretch.
Rajiv, let's talk about potential opportunity then. I know you've crunched numbers for Southeast Asian markets going back almost 30 years. And your numbers show, or rather your analysis shows that within 6 months after a last rate hike, and I'm assuming here the starting point is that what we just saw the Fed do, plus 25 basis points, is most probably the last one, although that may be debatable depending on data. 6 months after the last rate hike in the U.S., Southeast Asian equities usually drop by 20, to 40%. That sounds like an opportunity in the waiting.
Definitely, but my suggestion will be let it go down first, because recently we are still baking in an estimate that if in case things start falling, central banks may cut. And if central banks may cut, growth will resurrect. But we have not seen the cleansing event yet. As an example, post the rate hike, what are the drivers that lead to this kind of a correction? Higher interest rate plus weaker growth that leads to earnings downgrade, which have not been baked in yet. Flight to safer asset classes, which offers you attractive yield. And then the valuation derating. But I will also highlight that there are years when there was no US recession, 12 months after the Fed rate pause. But interestingly, MSCI ASEAN still traded sideways. They didn't rally as much. So first, we need to see the cleansing, we need to see the trough, and then we can start thinking about a rally.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.